Hey, welcome back to Tech Tune Up with your host, me, Paul Meeks, brought to you by my friends at Benzinga and also my firm behind my shoulder, Harvest Portfolio Management here in Charleston, South Carolina, where I, no surprise, run technology stock portfolios. Today is October 18, 2024. Lots of stuff to talk about. We haven't been together for a few weeks. I missed you. And a lot of stuff in the sector has been taking place. And I see some events I'll highlight today that should be really interesting as we go forward the next couple of weeks. And also, I will tell you that as I'm going through my dialogue here, think about questions, send them us here at Benzinga. And at the end, when I get through my tech trends, which is what I usually do to conclude, we'll put your questions on the screen and I'll answer as many as you have. That's the purpose. We're trying to make you some dough here in the tech sector. So let's get into some of the stock tells. Now, as you know, I bring these up not only to talk about individual companies, but sometimes their stories, good, bad, or indifferent, lead to some other investment conclusions in other names. So I'm super impressed with number one here, Taiwan Semiconductor. Taiwan Semiconductor is the world's largest foundry where they manufacture semiconductors for others' designs. Obviously, you know that there's always going to be geopolitical risk here because in Taiwan, the Chinese think it belongs to them, and the Taiwanese prefer to think that they're independent. But the business conditions revealed just a couple of days ago with Taiwan Semi's quarterly report are outstanding. And I've covered this company for a long time, maybe the best they've ever been. Of course, they're being driven by their manufacture of AI chips for the likes of Nvidia, and also they count Apple as a very big customer. So this stock has run, but it is the best in the world in what they do. And so I think you could even buy it now, even after it's run. So they had a very strong quarter. They have a very strong outlook. And this is kind of interesting. Two companies that either had been competitors or supposed to be competitors, Samsung in South Korea and Intel here in the States, are both struggling. And so even though Taiwan Semiconductor has most of this pie already, they'll probably gain another slice. Samsung will come back. It's a good manufacturing company. But I think Intel is a cluster, you know what, and I have no confidence that they're going to be able to execute on their ambitious manufacturing plans. So next, no surprise, let's segue into what I just talked about, Intel. This company has imploded. To give you an example of how bad things are, Qualcomm had approached Intel to buy it at a deep discounted price. If you're a Qualcomm shareholder, please say no to that. You should not buy that bag of shit. And unfortunately, through the CHIPS Act, the Biden administration has given billions of dollars to Intel to bring semiconductor manufacturing, particularly outsourcing, manufacturing other designs to our own shores. And why I like that concept. Unfortunately, I don't think Intel is going to be able to execute, and that's probably throwing good money after bad. So please, do not buy Intel, even if you're a value investor and you think it's ripe for a turnaround. I don't see it. Moving on to a private company, but one everybody on planet Earth has heard about, OpenAI. OpenAI, even though it's private, has just done a funding round in which now the company is valued at about $160 billion. To put that in perspective, that would be about number 60 on the S&P 500. And the S&P 500 is ranked by market cap, largest companies to smallest. So it's already a big player. Undoubtedly, the company will go public because these guys who work over there are now paper billionaires. They'd like to be real billionaires and find some liquidity for their shares. It's really important because OpenAI leads a lot of the activity in AI. And also they have as a shareholder, a big one, 49% stake by Microsoft. So don't be fooled. This is super important, what goes on at OpenAI to the whole revolution for artificial intelligence. This is interesting. There is a large contract manufacturer that works in Asia. It's called Foxconn. If you were to call it by its local name, that would be Honhai. And this company is very important, again, because they snap together the products that we design here in the States. But interestingly, their CEO, who doesn't come out with a lot of hyperbole, was very aggressive with his comments recently about the continued action with artificial intelligence servers. So Foxconn, Dell, Hewlett Packard, Supermicro, these guys make data centers that are focused on AI, and it's going to continue to be a real nice run here. So the servers that go in the data centers, but there's unfortunately negative to this. We know that the business is going gangbusters for these guys that make the servers. So far in our portfolio discussed here on Benzinga, we've been in favor of Dell. But here's what Foxconn does. Foxconn has all the business because they are a low-cost manufacturer. There is a reason that we design here and then send it to Asia because of the low-cost manufacturer. So if Foxconn gets in this business for constructing servers for data centers, the problem is they are lowball in price and they can get away with it and preserve their margins. And so unfortunately, the bad is they'll probably bring down the pricing and the margins for the US competitors. The good thing is we know the demand is super strong. Problem is super strong means great revenue. But the problem is you may not have the pull through on profits because of Foxconn getting in the mix and bringing down the pricing and the profitability for everybody in the industry here in the States. I think Apple is kind of interesting. You know that even though it's one of the biggest companies on earth, I always poo-poo it. I haven't my own career, but I do hold the stock, but I just don't buy it here. It's one of my least favorite or stay away from stocks in the Mag 7. I think I'm absolutely right, and I communicated this to you on this broadcast a couple months ago. I do not think that AI is going to fuel what the bulls on this stock think about when they say the mother of all iPhone upgrade cycles. Because the latest iPhones, the iPhone 16 Max, the iPhone 16 Max Pro, they have AI features, but they're embryonic, they're not very robust. And so why would you upgrade your phone for features that are incomplete? Come back, next year, right, a year from now, and maybe we'll talk. In the meantime, I think analysts on Wall Street have too much of this near-term driver baked into their estimates, and I think it could lead to some problems in the stock price. But what I do with all stocks, that even if I hold them and I don't agree with their fundamentals, I watch the price chart. I become a technical analyst. And you know what? I'm going to hold this stock until the price chart tells me not to hold the stock, but I don't believe in the fundamentals. Google is another company in the Mag 7 that I've been shying away from. They are under a regulatory assault. And the other thing that was announced just yesterday, which I think is interesting, and unfortunately it's a negative sign, is they are replacing a very senior executive over there who is the head of their digital ads. Now, their digital ads are the engine that bring this company to the dance. Now, they're working on all kinds of other cool things like autonomous vehicles with Waymo, but until further notice, this company is dependent on digital advertising. And why, before the company is to announce its quarterly earnings in just a couple of weeks, would they make a change to their digital advertising head? That does not bode well. I'm going to stay away from this stock. If I'm going to invest in digital ads, I'm going to continue to stick with Meta. I've always, at least the last couple of years, I've been in favor of Meta and not so much Google. One of the things I like about Meta is after Zuckerberg and company overspent on all kinds of crazy shit for years and years and years, they got some religion in beginning in 2022. And hey, I don't like when anybody loses their job, but they finally got more efficient. In 22 and 23, they fired 21,000 people. And they announced just the other day that they're firing some more, not a wholesale layoff. But hey, you know what? I like the fact that they're being efficient. I like the fact that you're just not throwing dumb money out there. And I also like the fact that they support with their large language model building for AI an open source system instead of being wed to OpenAI or any of the other competitors. So in digital advertising within the Mag 7, continue to favor Meta over Google. This is kind of interesting. DJT, that's Donald J. Trump's company. And I will tell you this, whether he wins or loses, I'm going to be shorting that stock after the election because it is a business fraud, whether you like the guy as a presidential candidate or not. And here's the deal. If he wins on November 5, the stock is going to rally. And because it's still a crappy business, you short on that day in strength. If he loses, the stock is going to continue to fall because, again, bad company and his political career may be over. So I think DJT is a short on November 6th, whether Trump wins or loses. Tesla recently had a big to-do. They called it their robot event. They had their Optimus robots serving people drinks at a movie studio in Los Angeles. And they also introduced their cyber taxi and their cyber van. And the key is the cyber taxi, because Elon Musk has always put out, or at least spun a tale, that you're going to have a Tesla in your driveway. While you're watching Monday Night Football, that Tesla is going to be a robo taxi for somebody else. And while you're not using your car, it's throwing you cash because it's being rented. I'll believe that when I see it, because he started talking about that in 2016. And it looks to me that the demo that they showed for the cyber cab at this event the other day was carefully orchestrated. It was almost designed like a Disney ride. And it was in a closed movie studio, and essentially looks like the vehicles were being steered around the studio by somebody behind the scenes, the great wizard with a remote control. So anyway, if you believe that Tesla is a buy, the only reason you believe it is a buy is you believe that they will figure out the riddle for autonomous vehicles. I am not so sure. We will have autonomous vehicles and Tesla will be there, but I don't think it's going to be the leading company. I actually think it's going to be Google again with their Waymo design. So anyway, I think that Tesla is grossly overvalued. Stock was trading at 150 last spring when they announced that they're going to have this event in April. Well, they couldn't get the demo ready in time, so they pushed it to October. In the meantime, just based on this thesis of autonomous driving, the stock went from 150 to 250. Now, because this event the other night was a dud, the stock is backed off to 220. But remember, it came from 150 to 250 just based on the anticipation of this event. Don't you think it should go back to the price that it was before the event, which is all the way back to 150? I think that's going to happen. I still like Micron. Micron is an interesting situation in high bandwidth memory, which is absolutely necessary for AI solutions. And because this is a company that is a triopoly with two South Korean firms, SK Hynix and Samsung, in this space, the problem that Samsung faces, which used to be the number one company, and it has a sterling reputation, but they cannot get their manufacturing for high bandwidth memory right. And so I think what happens if Samsung can't get its shit together, Micron and SK Hynix are going to take share in high bandwidth memory right at the right time for them and the wrong time for Samsung. So not only do we have a robust product, a robust end market, out of the triopoly, one of them is at least temporarily impaired, and the other two, including Micron, should gain a lot of share. ASM Lithography, which is a Netherlands-based company, but it is one of the most important semiconductor capital equipment companies on the planet Earth because they control the market for EUV, which stands for extreme ultraviolet. And you need extreme ultraviolet machines to manufacture the latest and greatest chips. But they reported a couple days ago, and their stock was smacked over the next 2 days, down about 20%, because they had a poor quarter. This is what I think. Yeah, they're facing some near-term struggles. But if you have a long-term perspective, like you can hold this stock for a couple of years, this is a great opportunity to buy a worldwide leader, almost a monopolist in its portion of semiconductor capital equipment. So the next stock, everybody always wants to talk about Nvidia. Nvidia, even though it had a nice run, was really hated in July and August. I stuck with it. Some people remember the dialogue in July, August, oh, the stock is too expensive and nobody is getting a return on investment on these AI, large language models. BS. That may or may not be true, but Nvidia is going to continue to sell a ton of chips over the next couple of years as they continue to build these large language models. And then they move to the next step of AI, which is called inference. I think Nvidia, believe it or not, goes higher, because right now it's trading for a relatively expensive 33 times next year's earnings. But Wall Street thinks that its growth rate in those earnings for the next several years, let's count them 5, is over 50%. So I like to look at something called the PEG ratio, PE to growth. In the numerator is your PE, 33 times. In the denominator is your long-term growth rate, 50%. So this tells me that even at 33 times, Nvidia is trading at a significant discount to its growth rate. So on a PEG basis, this stock is not expensive. This stock's actually relatively cheap. Here, let's take an example on the other end of the spectrum. Another stock that everybody loves, Apple and the Mag 7. They're supposed to grow their earnings about 10 or 11% over time. But their PE ratio is the same as Nvidia's 30 plus. So whereas Apple is trading at a valuation 3 times its growth rate, Nvidia is trading at a valuation at about 60 or 70% of its growth rate. So look at the PEG ratio. I don't think it gets enough love, whether it's by analysts or even the talking heads on television. Uber, I think Uber continues to be recent. We've had a good stock. We've had a nice run with this particular name. I was a little bit dismayed to hear that they may be in talks to buy Expedia. I know that they want to diversify their business, but I wouldn't buy Expedia. In online travel agencies, Expedia is the minor league compared to the major league. The much better company is Booking.com. Now, one of the reasons that they may be talking to Expedia is the CEO of Uber actually got the job because he was so good at being the CEO of Expedia. So he's actually run both companies. But the problem is when he left Expedia for Uber, Expedia got in some trouble. And so I guess you would say he knows the company, he knows what's going on. He could probably assimilate the companies, but don't spend your money. Even if you want to diversify your business on Expedia, it's just not a quality company. What I would do is take your cash hoard and buy a bunch of shares of Booking.com and make money on the upside in the stock, just like me and everybody else. Samsung, I've already mentioned, Samsung is the South Korean dominant company in DRAM and NAND flash and now high bandwidth memory chips. However, they've had some struggles. And so this is an opportunity, as I just now said, for SK Hynix and Micron, my favorite US tech name, one of my favorites, in the high bandwidth memory space to continue to play the AI infrastructure building theme. But also, Samsung is one of the world's largest outsourced manufacturers. We call them a semiconductor foundry. And this is an opportunity for Taiwan to grab some market share from Samsung, because if they're in trouble, Taiwan Semiconductor, probably the world's #1 foundry company in a pretty crowded field, it's going to gain even more share. They're going to grab even more of that pie. So Samsung's trouble are going to help on the Meeks buy list, Micron and high bandwidth memory, and in contract manufacturing, another stock that I love that's on my buy list, Taiwan Semi. This is really sad. Next, Boeing. Boeing is not only a victim of a pretty nasty and pretty extensive strike, but they're also, as they brought in a new CEO recently to turn around this beleaguered company, they also are going to fire 17,000 of their global workforce. That's about 10% of the total. That's really, really bad. I live here in Charleston, South Carolina, and here we build the 787 Dreamliner. And unfortunately, I have some friends that work in that plant, and I have some friends that unfortunately might be losing their jobs. It is really sad to me to see a industrial American icon crumble as it has, really through some self-inflicted wounds. I'm going to get to this in a second when I show you my refreshed list, but I am exiting stage left on T-Mobile. It has been a great stock for us, a really nice call by me, no offense, but I think it's expensive. So I would exit stage left and take your profits in T-Mobile. Netflix had a barn burner quarter last night. I am so impressed. I don't think I would buy Netflix because it's up 10% per day. But, like any tech stock, it's inevitable that it's going to have a dip. I would buy it on the dip. They are doing so well in streaming. The driver of last quarter's net new subscribers were their advertising tier subscribers, which is very good because that's more profitable for Netflix, right? Everybody wants to have an advertising business. Now they do. They are gaining even more traction in live sports. And the fact that they're so far ahead of everybody else and so much more profitable, they funnel their cash flow into creating more content. And then it's a virtual cycle because they create more content. That drives new subscribers. It also drives greater engagement from current subscribers, which drives nice profitability and cash flow, which allows them to plow even more money into creating new content and so on and so forth. These old Hollywood companies that they're competing with, like Paramount Global and Warner Brothers Discovery, they can't do that. And they are getting further and further behind. So it does blow me away through this virtuous cycle that even after all these years that Netflix has been in our lives, its lead over its competitors has only widened, even as a much more mature company, rather than shrank, which you would think would be the typical way things go. So anyway, that's what I think about the stock tells. Let's now move on to a couple of others, but let's get to my buy list. I always want to keep that fresh. Hey, I still favor my sector, but my picks are becoming more and more concentrated, going from maybe a posture I had at one time to shotgun shoot and cover a lot of names. Now I am really focused. I'm rifle shooting. So as always, here are my tech picks, right? I invest in this portfolio for clients. Find me here at Harvest Portfolio Management. But green is I would buy it today. Red is I'm selling it. And yellow is I'm holding it, but I'm not aggressive with it. I'm just keeping it in the portfolio. Micron, I told you, I'm in it at 106. The stock's not much higher than that right now. I still think over the next year or two, with its strength in high bandwidth memory and AI, the stock will be easily a 140 to 150 target price. I told you that T-Mobile has been a big winner here, but I just think it's too expensive, so I sold it. Microsoft, I'm kind of ho-hum on the name. Meta is my play in digital advertising over Google. Amazon and Synopsys, they're still on my list. I'm really getting kind of freaked out with Synopsys. Synopsys, I might pull the cord because the chart is telling me I'm not getting something right because that stock has been an absolute pig. So you might, next time we see me, see Synopsys colored in red rather than hold yellow. Nvidia and Broadcom, two of my favorite ideas in semiconductors, particularly AI related with Micron. Dell, I'm a little bit more cautious on. Dell is my pick in AI servers that go into data centers. However, I told you the story of Foxconn and how Foxconn is going to attack this market with low price. And I think Foxconn is going to blow up the margins for everybody. So even Dell, I'm holding. The stock continues to work, but I'm holding because I'm worried about the Foxconn threat. I told you about Taiwan's Semiconductor. I told you about Netflix. Yeah, on any dip, I would buy those stocks almost here and now. Alphabet and Arista Networks, I got them in the hold pattern. A couple of weeks ago on this show, I brought up Sentinel-1, which is ticker symbol S, as a new idea, but smaller cap in cybersecurity. I think I probably like Sentinel-1 these days more than I do CrowdStrike, which I think has some severe legal liability, and also even Palo Alto Networks, which has been on my list. It's been a winner, but I kind of just have it on the list, not a fresh money buy. Tuya is my micro-cap Chinese stock. I only buy it at its 52-week low, which is $1.28 a share. Don't buy it above it. Oracle, I think they got some mojo with Oracle Cloud Infrastructure Services and AI data centers. Guidewire is a stock I've been looking at. And I told you that if you have some balls and you're really in for a 1 to 2 year holding period, ASM Lithography, after its blow up earlier this week on bad short-term results, could be a nice long-term buy. But you know what? Don't expect it to turn quickly. It's going to take some time. So next, let's move to some tech trends. If you've seen this program before, that if you're going to invest in tech and other aggressive growth names, you have to be comfortable with the direction of interest rates. And luckily, the Fed, our central bank, started lowering rates for the first time in 4 years on September 18th. Now, I like to look at the CME FedWatch tool, and they're showing us that there is an 89% chance that when the Fed next meets, which will be November 7th, 2 days after the election, that they'll probably lower their benchmark rate another 0.25%. With their first onslaught on September 18th, they took it down 0.5%. I think we're going to have more measured decreases going forward of 0.25% each. So anyway, I know it's kind of weird for a tech guy who should be talking about semiconductors and AI to talk about the central bank of the United States, but you know what? On a macro basis, you got to follow this stuff. And so you really got to be aware of this. This is kind of interesting. We do know that these AI data centers are electricity hogs. In a couple of years, AI data centers themselves are going to consume 9% of America's electricity. Our current power grid cannot sustain this. And so, as a blast from the past, a lot of these hyperscalers that are spending on this infrastructure, that are building these AI data centers, are now linking up with utility companies, specifically utility companies providing nuclear power as their way to get through a taxed power grid in the United States and come up with new power sources, including Constellation Energy, which controls in Pennsylvania 3 Mile Island, which was shuttered after a ghastly nuclear accident in 1979, being opened up, and the power is going to go from them to Microsoft. Amazon has a new deal in nuclear, so does Oracle, so does everybody else. But it's kind of interesting. So I look for utility companies, particularly with a nuclear focus, as opportunities to play out this theme. Now, Constellation Energy Group, the owner of 3 Mile Island, ticker symbol CEG, and Vistra, VST, are the two obvious picks. However, the stocks have run so much, I would only buy them on a dip. But, in technology, and these stocks are now technology plays, they're not utility plays, that is inevitable that we'll have a dip, and then we can pick it up. This is interesting, and I'm asked all the time, should you trade before the election, right? Today is October 18th, and the election is a couple weeks ago, November 5, and we know it's going to be a squeaker. And we know, depending on the candidate that you favor, there's some pros and cons with each candidate as it pertains to not just stock investing, but investing in the tech sector. Each candidate has some ideas that could help or hurt my cause as a sector analyst. So I don't know if you're going to be cautious, and maybe we should just get to the sidelines and wait until we find out who's the next president of the United States. We only have to wait 2 or 3 more weeks because the volatility could slap us in the face, at least in the short term. And if we don't have it right, and who knows who the president's going to be, we might be involved in some stocks that the next day could take a tumble because the wrong guy won. So anyway, that might be every time I go on TV, I'm on TV several times a week. All the big networks, including CNBC, they're always they want sound bites. They want me to say you got to buy this now. And when I see opportunities to buy or short stuff in the moment, I am happy to say. But sometimes the right answer might be to do nothing. And maybe the right answer in this case is to do nothing ahead of a tumultuous election on November 5. So hopefully you've been peppering us with questions, but I'd like to answer them right now. All right, here comes a question from Chaplain Richard. That's cool. And I'll read it to you. As far as JD and the other China tech stocks, do you think they have another pop-up as China's pressure to stimulate more? Now, we have received some word about the follow-on fiscal stimulus from the Chinese government. But I would tell you what, they've already blasted us with a monetary stimulus, right? It has to do with interest rates going lower. Fiscal stimulus, they put information out there. I would tell you, because this is no longer new news, I probably would wait. I'd probably wait and see how it all goes down, because right now you'd be buying some companies at probably too rich of valuations. So let's wait. Let's see if there's more fiscal stimulus coming. When it comes, let's see how much of an impact it will be before we go forward. And you know what? I'm easily found. If you ever want me to ask about, or you ask me about this, between shows, just reach out. It's cool. But anyway, I would hold off on those stocks. Thoughts about NVTS? You know what? I don't want to get out too far out of my skis. I know the company, but not well enough to comment. Sorry, I'm not a good source on that one. What are my thoughts about Dell? I still have Dell. Remember, I pushed it pretty hard on my buy list. It was green, and now I have it in hold, wait and see yellow. And here is why, right? I think Dell is the play within the US server companies that find their servers in these AI data centers. SMCI was the play for a while, but unfortunately it's being investigated right now by the feds for financial accounting fraud. And whenever you see that, no matter how good the fundamentals are, you've got to blow it out of your portfolio. And Hewlett Packard Enterprise, HPE, is in this space. I don't like them as much. So you and I are on the right one as far as the US companies go, Dell. But here's the problem. As I told you earlier in today's broadcast, that Foxconn has a bead on this business. So Foxconn, coming out of Asia with their low-cost labor, is going to make a hell of a lot of these AI-centric data servers. And the problem is, if they're successful, they're known for their low cost and skinny profit margins. Unfortunately, they're going to export to the United States to their competitors that bad business model. So if Dell continues to rise, I might be tempted to sell it into strength because I'm turning against the long-term model. But in the meantime, I am, and I suggest you just keep on holding it. Is SMCI going to bounce back out of their hole? Fundamentally, the company's doing pretty well. They actually gave us a information recently about a big order that they had. Huge. And you guys know that I was riding the SMCI train before the accounting irregularities were mentioned for a long time, and it had been a great stock for me, right? One of my best picks in years. But I tell you, fundamentally, they're doing fine. The demand is there for AI servers. I do think Foxconn is going to squeeze the margins for the entire industry, so I'm worried about that. And you know what? I cannot, in good conscience, recommend at any price a company that's still being investigated for accounting fraud. Because what happens if the SEC comes back and they say, oh, you know those financial results that SMCI has been reporting for the last couple of years? They didn't earn X. They earned 20% of X if you accounted for it properly. So it's just too dicey because they're going to have to recast past results. They're going to have to change their business model. They're going to have to tighten up their financial controls. All that stuff is really scary and tedious and expensive. So I still, as I did, even though I one time loved the company, I'd still bail on SMCI. You got a potential accounting fraud. I don't know what's going to happen. It's just too damn dicey. Yeah, Palantir. I actually, so somebody's asking me, I was bashing Palantir at 25, and I don't think I was ever short it. But yeah, I didn't like Palantir. I didn't like Alex Karp. I thought a lot of their business was, or management commentary was hyperbole. But I will tell you, I'm now more in favor. I haven't bought it yet, but I am now more inclined to buy Palantir because, for this reason, not because any of my thoughts on the other stuff have changed, but they are diversifying, and we saw it last quarter. Their book from government business to corporate business. And I always thought that they were too wed to the government business, particularly the spy agencies. But as they bring in corporate customers, I got to say, I'm impressed. Last quarter, they had a nice mix between government and emerging corporate customers. If that trend continues, you could see me get on the wagon on this thing. Maybe I buy it, but I'm always going to buy it at on a down day. But anyway, yeah, I had been bashing it. This is why I've sort of changed my tune, but I had never shorted it. I don't know enough. Somebody's asking me about ALAB. Follow up with me and I can look into it for you, but I don't know enough about Astera Labs to be a good source. Baidu. Baidu is part of the conversation I had just now, or the answer to the question about the Chinese tech and internet names. I think I would probably hold off on Baidu for now. If you bought the stock and you were lucky to play the bounce in the Chinese monetary and fiscal stimulus, good on you. And I would keep holding it. But you know what? I wouldn't buy it fresh here. SoundHound. I don't know about, so I have a sizable investment in SoundHound. What are your thoughts? If you are going to play AI, I would play the same old, even though it sounds boring, AI infrastructure plays. I have 110% more confidence in Nvidia and the semiconductor plays than I do in C3 AI or SoundHound or any of those other players, which seem to me, they are getting some traction in AI, but they seem to be profitless prosperity companies. What I mean by that is, yes, revenues increase, but they don't draw it down to the bottom line. And so unless I see revenue increases being translated to free cash flow and more rapid earnings, I'm not on the game. So please play AI other ways. I will give you Nvidia 100 times out of 100 over SoundHound. All right, guys, thanks for your questions. I love to be probed. Remember, if I wasn't clear or if you have more to ask me, super easy to find me, right? And if you're down here in the bayou in Charleston, South Carolina, I'll even take you out for a beer. But anyway, that's all we got today. And remember, we are on a 2-week cadence now. So come back and I'll see you in a bit. And man, we'll have some more tech tales to tell. See you later, everybody.